Okay, again, we've got this example information that we're going to look at. Again, we've got a dairy processing company that buys raw milk from multiple dairy farms. In our example, they are going to purchase 110,000 gallons from these dairy farms, and they are going to process it into two distinct products. They are going to turn it into cream, and they are going to also process it into liquid skim. Now, during the processing, we are going to go from 110,000 gallons of raw milk down to basically 100,000 gallons worth of these other products, because 10,000 gallons are lost due to evaporation and spillage. Okay? So don't let the quantities of what's actually produced versus what they start out with throw you off. When we sell these products, we will sell the cream for $8 a gallon, and we will sell the liquid skim for $4 a gallon. All right, we are wanting to take the $400,000 in joint cost, which the joint costs are everything that's been spent up to the split off point, and we need to allocate that to these two distinct joint products. All right. Notice that for ease of use here, they're starting us out with beginning inventory of 0. We are going to produce 25,000 gallons of cream and 75,000 gallons of liquid skim from this 110,000 gallons of raw milk. During the period, we are only going to sell 20,000 gallons of cream and 30,000 of liquid skim, which means we're going to be left with some in ending inventory. 5,000 gallons of cream, 45,000 gallons of liquid skim. And again, we've got the selling price per unit. Here is an illustration so that you can see it visually. Again, we've got the joint cost of $400,000 that have been incurred up to the split off point, and then we have two separately identifiable products at the split off point, and these two happen to be joint products. The sales value at the split off point method is going to allocate the joint cost, the $400,000 in this example, to the joint products produced during the accounting period on the basis of the relative total sales value at the split off point. And when we're talking about the sales value at the split off point, we are saying if we sold all of it at the split off point, how much would we have for revenues for those individual products? Okay, so just because we are not selling it all and putting some in ending inventory, do not let that throw you off, okay? We do have some calculations that we're going to do, but again, we're going to use the sales value at the split off point, considering if we sold it all at the split off point. So this method uses the sales value of the entire production of the accounting period, not just the quantity sold. And the sales value of the split off method follows the benefits received criterion, which we talked about in one of our earlier chapters. All right, so here is our information. Let's go take a look at how we fill this form out and do these calculations. All right, if we were to sell all 25,000 gallons of the cream that we've produced and all 75,000 gallons of the liquid skim, then our revenues for those would be $200,000 and $300,000. If you add those two together, that's a total revenues of $500,000, or a total sales value of $500,000. Notice where that came from. 25,000 total gallons produced at $8 per gallon selling price for the cream. and 75,000 gallons produced of the skim milk times $4 per gallon for it. Here again, we're going to be using weights. Alright, so we're going to take the sales value at the split off point and calculate that as a percentage or a weight of the total sales value for the two products. Alright, so again, the total revenues for the two, $500,000. Therefore, if we take the sales value of the cream at the split off point, 200,000 divided by 500,000 gives us 40%. And then for the liquid skim, 300,000 divided by 500,000 is of course the remaining 60%. We are then going to use those weights times the cost to get the allocated amount. Alright, so we've got a joint cost of $400,000. We're now going to divvy it up by the sales value at the split off point, the weight of it. So 0.4 times 400,000 equals 160,000, and then that 60% times 400,000, 240,000. Notice here that if we add those two up, yes, it does in fact equal the $400,000 in joint cost. If we then take the amount of cost that needs to be allocated to the individual items, we can break this down on a per gallon basis. Please recall that we're not selling it all even though we produced it all. Okay, so we need to calculate this joint cost on a per gallon basis so that it can help us to calculate not just the cost of goods sold, but the ending inventory for the items that are still in ending inventory. Alright, so filling out an income statement using the sales value at the split off method. Of course, we're going to calculate the revenues, and these are the actual revenues. 20,000 gallons at $8 per gallon. Notice, not 25,000, but actually selling 20,000 only, times $8 per gallon equals the 160,000. And then we're only selling 30,000 of the liquid skim. That means we're going to be having 45,000 gallons of the 75 going to ending inventory. So 30,000 gallons sold at $4 per gallon gives us 120,000 in revenues. 160 plus 120 equals 280. Now for our cost of goods sold, the allocation of the joint cost. Part of it, of course, that 400,000 is going to be broken down to cost of goods sold, and some of it is going to ending inventory. Alright, so we have got production cost. We've got the full 40% at 400,000. We're bringing down the 160,000 that we calculated earlier for cream here. And we're bringing down the 240,000 that we calculated on the liquid skim. This is our allocation of those full production costs. But now what we're going to do is deduct ending inventory. Alright, we're trying to calculate cost of goods sold for the income statement purposes, but of course we can also have our ending inventory for the balance sheet. Alright, so how many gallons do we have left in inventory of the cream? We produced 25,000, but we sold 20,000. That means 5,000 gallons are still here. Their cost is $6.40 per gallon. Therefore, we're going to have $32,000 reflected on the balance sheet for the ending inventory for cream. And then on the liquid skim, we produced 75,000 gallons, but we only sold 30,000 gallons. So 45,000 gallons are remaining in ending inventory. Again, we're using the per gallon basis that we got up here. 45,000 gallons times 320 means ending inventory for liquid skim is 144,000. If you add those two up, you get 176,000. If we take the allocated portion of the production or joint cost for the cream and we subtract the ending inventory for cream, then we get cost of goods sold for cream. That, of course, can get subtracted from the revenues to give us our gross margin. And then, of course, we can take our gross margin over our revenues and calculate a gross margin percentage. We can do the exact same thing for the liquid skim. Okay, so 240,000 in production cost minus 144,000 in ending inventory. Cost of goods sold is going to be 96,000. Subtract that from revenues to give us gross margin of 24,000. Also having a gross margin of 20%. You can use this over here as your check figures. The sales value of the production rather than the sales is used because the costs were incurred in all units produced, not those that were just sold. This particular method follows the benefits received criterion that we discussed in an earlier chapter. The sales value at the split-off method is preferred when allocating joint costs. This is the preferred method because it objectively measures the benefits received by each product. This is seen as the best measure of benefits received as a result of joint processing. It does not anticipate any subsequent management decisions. This method does not require information about any processing occurring after the split-off point, unlike some of the other ones we're about to take a look at. There is a common basis to allocating joint cost of products, and all products can be measured by anticipated revenues from the product. So if we know at the split-off point what we can sell these items for, then we should use the sales value at the split-off point. This is a very simple method. The others, on the other hand, can become quite complex.